First discount house in Nigeria, incorporated in 1992, which over the last few years has transformed it into a financial service company providing asset and pension management services in addition to traditional securities trading and lending to large corporates. This company has developed a huge reputation as a very credible entity with which to do business in Nigeria. Joining us now on reinventing oneself in Nigeria's financial services sector is Mr. Rilwan Beo-Osagie, who's the CEO of First Securities Discount House. Thank you very much for coming through. Just talk to us about the environment of pension scheme management and fund management in Nigeria today.
Okay, well, it's a market that has grown. It's grown quite a lot as a result of the pension reform bill, which was signed in 2004, I believe it was. And with that came the bill actually made it compulsory for all employers to have retirement benefit schemes for all the employees, as long as you had more than 5 employees. And it was for both government and non-government employees. And pension fund administrators were licensed to manage these funds.
Right.
And also there were pension fund custodians, so that the assets were separate from the managers or the administrators. And that has grown pension funds. I think I'm not sure the figure, the total figure is probably almost $1 trillion now, I believe. And we have over, I think there are about 25 to 30 pension fund administrators. So basically what it has done, there is now a lot of long-term money. All this money is invested in fixed income securities and equities. And they have various guidelines as to how the money can be invested. So it has changed the landscape, because before this there was very little long-term money available in Nigeria.
All right, let's talk about the dynamism of the work that you do, whether you're working through provident funds that are sponsored by employers, or you're working within a public sector pension scheme. In terms of pension funds being major investors on the NSC, how much dynamic growth is there?
Well, there is, because I believe it's 25% of the funds, the pension funds by the PFAs, can be invested in equities, and the rest goes into fixed income. So that has helped the market. But as you're aware, I know the stock market hasn't been doing too well for the last 2 years, I would say.
Yeah.
But in terms of the fixed income market, you find that pension funds have been investing in the fixed income market. I think the challenge now is actually the existence of instruments to invest in. Right. There's a lack of instruments to investing in Nigeria, I think, at the moment.
All right, so
and I think that is the challenge for most of for pension funds.
All right, additional challenges have been posed by CBN reforms over Nigeria's banking sector, and we also know of the much publicized interventions on governance of the NSC by the Securities and Exchange Commission. What's your opinion of what's going on in Nigeria, and how has it impacted on the work that you do?
Well, corporate governance is key in any country, in any institution, in any industry. And I do believe it's about time that the regulatory institutions take a much tougher stand as regards corporate governance. Corporate governance, financial performance, there is a correlation, and I don't think anybody can argue against that. So I do think it's a good thing. Yes, it has affected business in terms of what you find happening now. Yes, banks have been less reluctant now to engage in lending activities. But it's not only corporate governance. I think one of the problems we do have in the country at the moment is enforcement of contract and dispute resolution. And you find that for most banks, when you lend money to the real sector, you find it very, very difficult when there's a dispute resolution. Right. Judgment in courts just takes too long.
Right.
And therefore it actually puts off banks lending to clients. It's a real dampener.
All right, you mentioned potential growth, for instance, in the fixed income market versus equities, all of the above. Now, we've seen an interesting phenomenon in South Africa. It's still a debate, but basically the suggestion is that where government is cash-strapped in meeting some of its priorities, it should take up something like 5% of the earnings of pension funds into infrastructure bonds to try to foster cash injection into major government priorities. Nigeria is also faced with an infrastructure shortfall. Is there a role for pension funds to play beyond the fixed income market?
Yes, I believe there is, because the pension funds would be a good source of funding for infrastructural projects, because most infrastructure projects are long-term, 5, 7, 10, some even 20 years. And a yield curve exists now because government bonds are issued on a monthly basis with tenors ranging from 3 to 20 years. So I believe when the infrastructure bonds, if they do come out, I don't think there will be a problem with investments. I think the main challenge here is the origination of these instruments. At the moment, these instruments are not being originated. So the issuers are not there. We haven't had any infrastructural bond at the moment.
All right, let's get a perspective from our guest host. His name is Kobile Kganachi. What do you make of this issue that there aren't sufficient and a variety of instruments that pension funds can be investing in?
Well, I mean, that's going to be for any emerging market, and specifically ones that are newly emergent, that's going to be the issue. If you look at South Africa, for instance, we've had a formal capital markets here for many years. You've got far more depth and breadth in the market, and still we lag relative, say, in the American market, or for instance the British market. We just have tons and tons and tons of instruments. I think the important thing, though, is that Nigeria has taken an all-time crucial step in creating a formalized pension environment. So they've taken away the need to make short-term capital, and they've said to people, how do you save over the long term? Now, the only thing that needs to still happen is the ability to now invest in growth asset classes, because bonds aren't really a growth asset class. Bonds are a yield-based asset class. And the only way that you now create the real growth and stay ahead of inflation is to be able to create an environment whereby you can potentially go and buy more shares, not just 25%. But that comes with a more deeper capital market, which will obviously take time.
Right. Okay, a final input from you, Mr. Beo-Osagie. Just your outlook for Nigeria, for instance, on fiscal and monetary management issues. The economy is set to grow above 7% this year and even continuing into the near future. We know that inflation's been tamed somewhat year on year to about 13%. If you're looking at it at monthly figures, it's about 10.3%. So something's being done about getting the fundamentals right in Nigeria. Entrepreneurs still arguing for better credit figures and lending rates from the banks, but generally there is a sense that this is a country in which to do business. Do you reiterate that view?
If you look at Nigeria within Africa, it's a very big market. I mean, if you look at sub-Saharan Africa, outside of South Africa, is probably the next biggest market. There's a lot of potential. The markets are growing. I mean, whether you look at like the fixed income market, and even if you look at the stock market compared to other stock markets within Africa, it's a large market. A lot needs to be done, and so therefore there's a potential to do a lot of business. We're talking of 150 million people in here. There's potential, and I think what has been done as regards, first of all, let's get the corporate governance right in the banking industry, because at the end of the day, it is the banks that are going to fuel economic development within Nigeria. Let's get the corporate governance right. Let's get the corporate governance right as regards the capital markets. And then it will be much easier for us to see real growth in the country.